You don't know what's going to happen to you, right? You know, you hear about people having strokes in their 30s and you think, well, actually, if you have a stroke in your 30s, you're never working again.
Naomi Greatorex is the managing director of insurance broker Heath Protection. It's not pleasant thinking about dying or getting seriously ill. But what happens if we don't cover ourselves from the worst things that can happen?
Because we don't like to think about the worst things happening to us, we don't think it actually will happen.
Today's conversation, there's a saying in the insurance world that goes something like, insurance is never bought, it's always sold, which I think reflects the fact that no one really wants insurance, but sometimes we do need it. Today, I just want to have a conversation about the different types of insurance around protecting individuals so that people can just listen and kind of understand what it is and why they might need it without being sold to, if that makes sense. First of all, I know something came up in the briefing call that I'd like us to start with. Could you just explain what the most popular insurances are in the UK at the minute?
Yes, that's a good question. So I think when you're looking at the UK market, I think car insurance is always one we have to buy. So everybody buys car insurance. Home insurance, contents, because people are worried about a leak or, you know, your jewellery being stolen. But an interesting one is pet insurance. So obviously pet insurance in the UK is super, super popular. And actually it's more popular than life insurance. So, and I guess the reason for that is because we all love our pets and we're worried about what might happen if they get sick and you've got vet bills. So people want to insure against that. But it's surprising to know, I think, that more people are insuring their pets than themselves.
It's a madness, isn't it?
Yeah.
Because obviously the pet bills, like you're thinking, oh God, if Tibbles gets ill, it's a £5,000 bill.
Yeah.
But then if your wife dies,
yeah,
that's pretty spenny.
100%.
Yeah. And
exactly.
people would rather protect the dog than themselves,
100%.
which is kind of madness.
My dog's got a lot of life insurance, health insurance, whatever it is. Dog insurance. Is a Japanese Akita, big dog. But when they get sick, it is so expensive to look after them. I don't have life insurance, but I do have health insurance.
Yeah.
Health insurance. Little beeper.
Yeah. So I had an incident recently where, like, on a night out, I was assaulted by a stranger, like complete sucker punch to the side of the head. And after coming round from that, like, I was in the hospital and she was like, well, they hit you, it knocked you out, you smashed your face off the floor. If you'd have fallen on this side of your head, you'd probably be dead, so you're pretty lucky. And it was kind of like one of those moments of like, I had absolutely no control over that, didn't even see it come in, just woke up on the floor, didn't even know what had happened. And I got insured after that because it was kind of like a wake-up call.
Yeah.
I know that random stuff can happen, but do you have any insight into kind of how important it is and like how common these things are to happen to people?
Yeah, I think that's a really good point because I think we don't really consider the risk to ourselves until, you know, something
slaps you in the face.
Something literally slaps you in the face.
Like Mike Tyson, everyone's got a plan till they get punched in the face.
Yeah.
He's talking about you, Mike Tyson, was there.
Yeah. Maybe he hit me.
It looked like it.
Yeah, it did. I was a mess.
Yeah, it is true. And that is the thing. And I think we all, because we don't like to think about the worst things happening to us, we don't think it actually will happen. But the stats are quite scary, actually. I think when I know.
9 a.m, mate, strap in.
It's too early in the day. I haven't eaten breakfast. You were talking about death and life insurance. And I'm an optimist, so this is going to be a tough conversation.
I hate to break it to you, you're going to die, mate.
No, I'm not. Stop lying. Poppycock.
Even worse, I'm going to talk about the probability of death and critical
illness. Let's go. Strap in.
Yeah, so when you look at the probability and when we look at the stats, you've got a 1 in 4 chance of suffering a critical illness before the age of 65. And a 1 in 4 chance of suffering an illness, which means that you can't work before the age of 65.
Critical illness, is that like
what is a critical
breaking
illness?
a leg, or is that like an actual illness?
Yeah, so that's a great question because they do all sound very similar, and we do use lots of like jargon, I think, in the protection market, which is super unhelpful. But so critical illness is covering you against a serious event. So we would say something which is going to make a real difference to your life. So being diagnosed with cancer, having a heart attack, having a stroke, being diagnosed with MS. So it's something where you would need a sum of money in order to be able to get yourself through that. So if you think about that, and that's a 1 in 4 chance.
1 in 4?
Yeah.
Oh.
I know. Sorry. They're the stats. It's not me.
There's 5 people in this room.
Yeah. One of you's going to get ill. Yeah. I know. Yeah.
Is it too early to start drinking yet?
Yeah.
And then the like income protection is for the illness cover. So that is your breaking a leg, falling down the stairs. It's, being diagnosed with mental health and, hurting your back. It covers such a range of different illnesses. But that is what that statistic means.
What are so you talk about, there's like critical illness, which is, I'm in hospital, I'm seriously ill. Income protection, is like you've broken a leg or something's happened that's put you out of work temporarily, like a couple of months is that kind of time frames?
Actually, income protection can be for anything,
okay,
really. So critical illness is based on a list of illnesses, so it covers the big stuff. Income protection is for a reason that you're not able to go to work and do your own occupation.
Why would you need both then?
So because they are different. So with the income protection, what you're doing is saying, okay, if I was off sick from work, would my employer pay me, and for how long? And then say you get a month of sick of work, then what we would do is say, okay, well, what happens in month 2? And that's what we would be protecting, your income, so your ability to earn some money after month 2. The insurance would pay you an income until you return to work. Critical illness is based on being diagnosed with, for example, cancer, and then it would pay you a lump sum on diagnosis. So you get that lump sum, it's yours, it's done. So say if you were diagnosed with cancer, you had £50,000 critical illness, you would put your claim in with the insurer, they would pay you the money, and then your policy finishes. Income protection is something that runs alongside your work until you retire. So you can make more than one claim. It can pay multiple times, and it can, pay for the same thing or a different thing. It is really there. It's like a privatised sickness scheme. So.
And you could end up with the lump sum but getting paid every month, theoretically, for indefinitely till you're sick, till retirement age. If let's say you could never work again.
Yeah. Exactly that. So you'd get your lump sum. So they work together.
For critical illness.
For critical illness, yeah. So they complement each other. You'd get your lump sum for the critical illness. And then if you weren't able to work, if you have a long-term income protection plan, it will pay you until retirement. An interesting number that Liverpool Victoria came out with their claims last year. They had their longest claim was for 38 years.
For income protection?
Yeah, for income protection.
I know someone who's been on it for 25 years.
Yeah.
What
kind of injury?
Well, it was like they just can't work because they've got internal issues. I mean, I don't really go into it with them, but yeah, it's a family friend, but she's not worked for 20 odd years. She worked in insurance. She worked for Zurich.
That's why she's got insurance.
She got insurance.
We're all insured.
Yeah. Got signed off with long-term sickness and has been claiming that benefit ever since.
Yeah. So, and that is that is the benefit of income protection. You're going to get that monthly amount until you return to work.
The one thing that I would say about insurance, or the feeling I've always had, is they don't want to pay me, and I'm just giving them money, and then they're going to be like, oh yeah, but you are only insured on the left side of your body, not the right, or do you know what I mean?
Yeah,
some technical detail. And is that the case?
They literally just did that to me and my son. So they always they say they cover you, but then when you actually need them, they don't always, like health insurance, they don't always cover you for what you need, or there's an excess to pay, which is really annoying.
Yeah. With this type of insurance, because it's fully underwritten up front, you have the peace of mind, I think, of knowing that as long as you've given the right information.
I'm going to hit that. Doesn't work. I hit the buzzer because...
It's because I hit the buzzer. You don't have the clout, Damien. Stick to your job. Let me hit the buzzer when it's time to hit the buzzer. Yeah,
What's that mean?
Stay in your lane, mate.
I don't know what it means clearly. So no, it's basically we hit it if there's a term where we're not sure. So I just want you to clarify what you mean underwritten up front.
Perfect.
Yeah.
Of course. Yeah. I'm going into protection speak again.
It's okay.
Yeah. So when you apply for insurance, life insurance, critical illness, income protection, part of the process of being able to put that in place is that you have to answer health questions. So each insurer will have a list of health questions that you have to answer, and we would go through those with our clients and talk them through it. But basically, they want to know all about you. They want to know how much you drink, if you smoke. They want to know what your history is health-wise. So we would put all of that information in an application, and then you submit it to the insurer. And then the insurer will look over that and say, okay, based on all of this information, we're happy to insure you. Here's your insurance. And that's what it means. It means that they are looking at all of your medical information up front, so that when you get that insurance, you know that as long as you've given all of the information that they need and been truthful, that insurance is yours and it is in place.
Do you think people are truthful? Because if they're like, how many, they always say,
smoke?
how many do you smoke? Do you smoke? And then they're like, how many a day? And you're like, 1 cigarette every 2 weeks. And it's like, clearly not. Like, do people not, how much do you drink? And no one's going to be like, I get lashed every weekend and have like 20 beers on a Saturday and like a bottle of wine on Sunday. And so like, people obviously trying to downplay it to make them, I go to gym 5 days a week, but they don't go to, they go once a month. Does that affect it? And how much do you think people are fudging the facts?
I think I would always say, like, we ask our clients questions and like ourselves, and we always say it's super important that you tell the truth, right? Because you're taking out this insurance because you've got a need, and the need is that you want to know that if you're sick, if you get critically ill, or if you die, you're going to get a payment. So the importance there is make sure you're truthful on your application, because you don't want any reason at the end for the insurance not to pay out. So when people say to me, I smoke at weekends, I'm like, you're a smoker. you smoke at weekends. So, it's important to say that. Or I vape, and vaping is actually...
it counts as smoker?
It's counts as smoking, yeah. So we explain all of this up front so that the clients know, because it's really important. And when they come to make a claim, they've got all of the information that they need and it's all correct.
Will the insurer say check your lungs on death? So if you die in a car crash, would they like cut him open? Oh, he's got black tar in the lungs. He's a smoker. He said he wasn't a smoker. We're not paying.
I guess it's difficult.
He was holding a cigarette at the time of death.
He was holding it for his mate.
Yeah.
Asking for a friend.
I guess it's difficult to say that, isn't it? Because what you have is smoking and non-smoking status, and you can be an ex-smoker.
Yeah.
So the point is that, if you gave up smoking, you'll get non-smoker rates. So that becomes a bit difficult. I think it is more people get caught out on the evidence that's then collected. You've got to be careful, because people are more honest to their GP than they might be to the insurer. I'm
always honest to my GP. Like, she knows everything about me, and I'm just like, that's confidential, right? But I'm always honest with the doctor. But then when it comes to other things, you're not always. You always put yourself in the best light. But with the doctor, I'm like, I do this, I do that.
Yeah.
So it's
exactly. And what you've got to remember is when you're making a claim, the insurers are going to write to your GP and collect all of your medical evidence. So that is why we say, don't put a spanner in the works. You want to know,
right.
if you're writing £100,000 of life insurance for your child, if you were to die, that they're going to get the money.
What is a good amount of life insurance to have, would you say? You said 100k there.
That's just an example. So what we do is we talk to clients a lot about their kind of circumstances, right? So if you've got a £700,000 mortgage, then you're going to need at least £700,000 worth of life cover. I guess it depends. We talk a lot about people with children. So, what's the cost of, if a parent dies, the cost of bringing up a child alone. So we talk about life insurance as an income so that people can cover that. So there's various different ways to set up life insurance, and for different amounts, depends on the need. So there's no number there.
And is there kind of like an average cost, would you say? Say you're like typical person.
Yeah.
Is there like, what kind of figures should people be thinking about for life insurance, critical illness, or any other covers? Yeah,
interesting. So I did some brief quotes for you to give you a bit of an example. Somebody in their 30s, someone that's 30 that's looking for £100,000 worth of life cover to age 67 would be under £10 a month, for £2.50 a week. Critical illness, so if you were looking at, I think it's 50,000. Hold on.
Yeah, it's fine. Check your notes.
Check my notes.
It's good.
I want to get the numbers right.
No, it's good.
We
have people come here talking all sorts of nonsense without any notes. It's good that you got the facts. It's good that you got the facts.
Yeah, so for the critical illness of 100,000, it would be £35 a month. For 50,000, it'd be £18 a month.
That's 50,000 a year?
50,000 is a lump sum.
So critical illness is a lump sum one.
So,
that's the one.
But that was like 50 quid all in, or something that you said there. Like, what were the figures? So for all the covers?
Yeah, and then income protection. So for a 30-year-old, £2,000 a month, and that's full income protection. So you'll be able to claim it until you retired and went back to work. That is £33.75 a month.
So
So
full income.
£405 a year.
So they'll match your salary.
So you
every
could
month.
get that, and then in the 12 months' time, if you could never work again, you would get that as a salary for the rest of your working life until
So
you
it's
retire.
the same salary that you had.
Well, it's the amount that you've insured. So what they typically do, I think, is they go, how much does it cost you to live your life, kind of thing, rather than like how much you paid. Because a lot of people save and stuff, and you might not need to save if you're just getting paid out.
Yeah.
You know?
So you can insure up to 60% of your salary. Your
Okay.
gross income up to 60%.
Up to 60%.
What about for business owners? Because I'm a business owner, and obviously I take dividends, and they can vary. And the problem I have is the business earns a lot more than I take out of it.
Of course.
So how does that work for them?
So you can, is it a limited company?
Yeah.
Yeah. So you can set it up through the business.
Yeah.
You'd have it's like an executive scheme. So you can insure a lot more. So you can insure your dividends, you can insure your salary up to 80%. So you'd be able to insure that through the business. And also things like pension contributions and NI, you can do that all through the business. So you get much more flexibility in a business plan.
It's also, for any business owners out there, it's a tax deductible expense as well, isn't it? So
It's an allowable expense,
yeah, so it comes off before corporation tax and things.
That's it, yeah.
Even though you can actually, I got quite a lot of cover, and realistically after, I think I pay about £130 a month for everything, but I'm covered to quite a high level, like £1 million a life and things like this.
Yeah.
But it's actually relatively affordable still, even at that level. And like the numbers you're talking here, £10 a month for life insurance.
Exactly.
There's a lot of
It's a lot of cover for not a lot of money. But the problem is, I think, as well, is that people delay. So I think, for a 30-year-old, it's going to be one price. And then if you're 40, it's going to be more expensive.
But if you get it when you're 30, do you have the same rate when you're 40? Or does it go up as you get older?
It's guaranteed. Yeah.
So it's the same £10 a month for life.
Exactly. Yeah.
And so, Lisa Conway Hughes, who I know you know, she sat there and said that she finds that a lot of people pay the same amount over their lifetime, whether they get it at 30 or 40. It's just because you pay more at 40. You're basically catching up on the premium almost.
Yeah.
Is that how it works?
Well, I would say for every year you get older, the premiums go up between 10 and 15%.
Oh, wow.
So
It
for
goes
every
up a lot.
Yeah, a lot. Yeah. So for every year that you get older, the premiums in the market are going up between 10 and 15%. So that is the extra expense. And then on top of that, you've got the change in health. So it's at 30 and 40, a lot of things can happen. So that is a problem. Are you insurable?
Another thing I think as well that people might not consider is, in your 20s, that's probably when you need cover because you don't have anything to fall back on. Whereas in your 50s, you might have built up an asset base where you go, if I die, my family will be okay because there's investments and savings and pensions.
Yeah.
But it's actually the 20, 30-year-olds are the least protected. They've got nothing to fall back on, have they?
Exactly that.
Yeah, but you've got no dependence at 20. Like at 20, if
for yourself,
I broke my leg, you started early. That's true.
Yeah.
But a lot of people don't
Shoot
have
to kill.
at 20 I was in uni. So if I broke my leg, I'd still go to uni, or I could still. I didn't go to uni anyway. I didn't go to very many lectures in my first year, but you would still go, and even if you had you don't have any dependents, you don't have a mortgage.
Yeah, but if you lost your job, you fall into debt, and then that debt takes you years to get out of.
But at the age of 20, your rent isn't the same as it is when you're 30s.
Yeah, but then it all scales, doesn't it? Your income's bigger at that point. What I'm saying is, at 25, if you fall out of work for any reason, you're.
But 25 had a lot of disposable income.
I mean, what are the stats in terms of the likelihood at those kinds of ages? Do you know?
So you do see claims between the early teens to the late teens, late teens to mid-20s. There is, because less people are taking it out at that age. So it's 1%, 1.7% of people between 18 and 24 will make a claim. But how many people have actually got insurance in that sector?
1% of people in that age group make a claim?
1.7, yeah, according to Liverpool Victoria.
That's high.
18 to 24.
That's high, because they're the people that have got cover.
Yeah.
How many people in that age group haven't got cover that could have made a claim?
Yeah, exactly. The youngest claim for Liverpool Victoria was 23. So they're people that are in their 20s, 23, 24, I would say, that are making a claim. And then you're looking at that next age group, which is up to age 40. And about 35% of the claims come from that age range. So from 24 to late 30s for Liverpool Victoria. So these are based on one insurer's stats.
What type of claims are they mainly?
So about 60%, I would say 60% of claims are coming from musculoskeletal and mental health.
So it's your back. in your brain.
Back in your brain, yeah.
It's kind of, I don't think people even consider that you could be covered for mental health.
Yeah, no, I don't either.
I don't think people know that depression and things are things that can be protected.
Yeah.
Wow.
Yeah, I've dealt with depression claims. So we've seen, because we deal with the claims as well for clients. So I've seen depression claims. I had someone claim for long COVID. So,
wow.
Yeah. So wouldn't expect that either.
How do you prove your depression? Like, how do you check if someone's depressed?
So you would
have to be seeing a doctor, mental health specialist.
You'd have to be, you've seen a GP, your GP will have referred you somewhere, they will write to your GP, they will look at the information, yeah.
Yeah, I know. I read a report that was saying like one of the average claims for, it was something like open heart surgery was in the 40s or something like this. It was so young when I looked at it. I thought it was all like 70-year-olds, and it was like, no, actually it's people in their 30s and 40s.
You don't know what's going to happen to you, right? So nobody knows. It will be less likely to happen to you in your 30s and your 40s, but it's not saying it's impossible. You hear about people having strokes in their 30s. And you think, well, actually, if you have a stroke in your 30s, you're never working again. So
I think we all know someone that's had something tragic happen to them.
Yeah.
And I think as you get older, that number just goes up and up and up, doesn't it?
Yeah,
to the point when you're probably in your 60s, you probably have lots of people or you yourself has had some sort of accident, illness or tragedy in your life.
Yeah. Well, 1 in 4.
Yeah, 1 in 4. 1 in 4.
So,
where's the silver lining in this?
I know. Yeah.
If you get cancer, you get a payout, mate.
Yeah.
You get big bucks.
Yeah.
We're going to Vegas, Damo.
It wasn't really until I sat next to my mate Tamaine on the podcast that I realised I was going bald in a big way. The sides of my hair were just going to the back of my head, which, for some men is fine, but for me, I think I'd look pretty weird if I was bald. So, not one to go bald gracefully, I started looking for solutions. Obviously, I could have gone to Turkey or got a hair transplant or whatever, but I wasn't quite ready for that yet. So then I stumbled across Manual and started using their services. I was really happy with the service overall, so I approached them and asked them if they wanted to sponsor the podcast, and they said yes. This couldn't be simpler. You just go onto their website, fill out a quick questionnaire, and then they send you clinically proven treatments through the post. No need for an appointment or anything like that. If you want to try out Manual for yourself, we'll leave a link in the description for you. And if you use code MM55, you'll get 55% off your first order. So do you think there's any types of cover that are just a waste of money?
Oh. Types of cover that I
advise,
or just in the market.
Is there any? We've got
warranty
here.
Insurance.
You're an expert, and what the listeners want is the insider knowledge of like the industry, because it is intimidating. It's full of jargon, and to be honest, most people, like with financial advisors, they think they're going to step into a room with someone and they're just going to be sold to, and they're going to walk away with a load of stuff they don't need.
Yeah.
Is there kinds of cover that you think, this is what everyone should have, and this is stuff that most people should probably don't need to think about?
I think the products we talk about are all needed. So we only really advise on, we do private medical, but in this space, we would say, life insurance, critical illness and income protection. And I would say all of those products are needed. So
by everyone that works?
Not by everyone. So I would say, if you're a single person, you don't have any dependents, you probably don't need life insurance right now. You're not taking out life insurance for, your children or your partner. So that can probably wait. I think income protection is always the one I lead with. If you're working, if you rely on your income, then income protection would be the one that came first. Critical illness is equally important in my eyes, because it's making sure if something big smacks you in the face, it's going to give you that lump sum that you need.
They're like me insurances. Life is a them insurance, isn't it?
Yeah.
Life is like a legacy thing.
Yeah.
Like when you've got people to care about, that you think, if I die, how are they going to be okay? Whereas critical illness and income protection is like, how am I going to be okay? And that's even if you're single, that's a concern, right?
This whole convo is like spun my head, because for like, the last 20 years, I've got calls and they're like, we want to sell you life insurance. I'm like, I'm fine, don't worry about it. I'm like, I'm not going to die. I'm like young and fit. And like literally, I always have jokes though. I'm like, look, I've got no kids. I need life insurance. I'm going to go party. Like, I'm fine. Yeah. But now I've got a kid, no insurance apart from health insurance.
Yeah.
Do you think for me it'll be most like one kid, is it better to get life insurance first, or do you think like critical illness and income protection first. Obviously, ideally,
Get
all
a job
three.
lot.
All three,
Get 'em
but
all.
Get them all.
You make a sale after this. Get a sign
you're
here,
a
mate.
sales
You need all of those. Yeah. I mean, life insurance is important for your child, right? So you want to make sure that they're okay if something happens to you. So life insurance is key.
It's key, yeah.
But if you can't work, then you can't pay your bills. So
What about workplaces then? So are people getting certain levels of cover at work already that they might need to like check before they buy their own cover?
yeah, maybe. It could be that you're getting some cover through work. You might get death in service. You might get some sort of...
You might get what service?
Okay, so death in service is like life insurance through work.
Death in service.
Death in service.
Sounds like
I
what
know.
they had in the war or something. Or like, yeah.
So with if you're working for an employer, you probably get some form of life insurance.
You ain't. Don't come knocking. You just had a pay rise, mate. You ain't getting nothing.
Damo sort me out. Damo's going to talk to you afterwards and sort me out with some nice life insurance.
There he is.
Yeah. So for some employees,
Will's going to be sitting here next week instead of me.
Death in service. See you later.
death in service. So you might get life insurance through work. You might also get some form of like sick pay. So you just need to check. What we say to anyone that's coming in is know what you get through your employer, so we can help you review it and see where the gaps are.
What's statutory? Do you know what the minimum legal requirement is in the UK?
£116 a week.
Wow.
We did more than that on dinner the other night before the England match. So I don't think that's going to be.
No, statutory sick pay is £116 for 28 weeks. So
And when does that kick in? Is that straight away in some cases, or?
Yeah, so it's through your employer. So once, if your employer's not paying you, then they would apply for statutory sick pay, and then you would get paid the £116 a week for 20.
That's shocking.
28 weeks.
That's brutal.
My old employer was statutory everything. You know, they were just like, oh, we're the government standard, which meant we're the minimum.
We're giving you nothing.
Yeah.
For people who are self-employed or more like freelance, how does it work for like income protection? If you earn like £2,000 one month, £5,000 the next month, £4,000 the next month, how does it work for your income protection?
So I would say when we review it with people, we look at last year's tax return and we'd have a conversation with you. Is that a good year?
Okay.
Is it a standard year?
Standard year.
What I would say is take an average. Like if you've got something where your income's going up and down a little bit, take an average number. So don't go for the top number. Like I earn £5,000 this month, so I'm going to set myself up with the maximum.
Yeah.
So we would always say, understand that when you come to claim, it's 60% of whatever you earned in the year before. So you want to be sensible.
Makes sense. Cool.
Yeah.
Why is on the income protection, is that what it's called?
Yes.
Yeah. Why is it only up to 60%?
Because you can't be better off when you're sick than when you are working. It's a short answer.
Yeah, but it should match it, no? Like if someone crashes into my car and then like it's not my fault, they either buy me a new car or like the insurance is going to buy me a new car, or they're just going to pay for they're not going to be like, well, you can have 60% of it repaired and then we're going to leave this much dent in your car. So why is that? Same with the doctor, health insurance, like you go to the doctor, I broke my foot, they fix your foot, or like, they do whatever. So why is it only 60% of your salary covered?
So that's paid tax-free. So you get a 60% tax-free. So it's paid to you tax-free monthly. So when you're paid through work and when we're quoting, it will be based on your gross income.
Okay.
So we might be saying, okay, so you earn 40,000, so you can have 60% of 40,000. And what is taken into account is the fact that you'll have paid some tax and obviously your national insurance on that. And then they don't want to, I guess, because if you're exactly at 100%, it is...
you'll be making more than you were before.
Exactly
definitely,
that. So you can't be better off while claiming.
That's cool. That's tax-free though.
It's good that it's tax-free, yeah. The critical illness is tax-free as well.
Okay.
Yeah.
Okay. So that's amazing. How do people make sure they get the right kind of cover for them? Should they just be going on a comparison site and banging in like, this is me, take the cheapest option?
Good
question. Well, I'm a broker, so I'm obviously going to say it's very important to get advice. And the reason I say that is because there's so many different products out there, so many different products that you can't, I think it's so confusing. I think our market's confusing. There's so many products. They all do different things. They all have different, rules, or, some are budget cover, some are comprehensive cover. It's like, what does that mean? So I think it is difficult to look on comparison sites, if I'm honest, certainly for critical illness and income protection, things which are more complicated. I also think with life insurance, you're not probably getting the advice that you need in regards to how you set it up. So we give advice on life insurance and trusts. So that is where you wrap your life insurance in a trust wrapper, which means that if there is a claim, it doesn't go into your estate. So you nominate the beneficiaries. You get to say what you want to happen to it. Doesn't get taxed. Yeah. Exactly that. So you get to leave it to the right people, and you get to make sure it's free, wrapped, and therefore not taxable.
I spoke to a family member on this before getting cover for myself, and he was like, "You're doing this to protect yourself. Don't scrimp on it. Yeah. Like, spend an extra tenner a month. Like, go to a broker, have a proper conversation." In the same sense of like financial advice or a mortgage, rather than just going for the cheapest off the shelf thing, because you might as well not get it if you're going to do it that way around.
Yeah.
Do you find that the insurance, are there types of insurance that are like bad, or the ones that are just like products that people buy that are just not suitable for them?
It's difficult to say, isn't it? Because people don't know what they're buying sometimes. So, you might see people, and because you have different types of income protection. So you have income protection where the premiums are guaranteed. You have income protection where the premiums are what we call age costed. So what that means by age costed is that every year that premium is going to go up based on your age. With the guaranteed premiums, the premium is going to remain the same. So if you don't understand what age costed means, and you don't understand what guaranteed premiums mean, you could be taking a policy which maybe isn't suitable for you, because although in the early years it's much cheaper, as you get older it's going to get a lot more expensive. So you might be looking at those two premiums thinking, oh, one's £35, one's £42, I'm going to take the £35 one because it's cheaper. And what you don't know is actually the cheaper one is going to go up.
Right, I got a joke for you. So, knock, knock. You say, who's there? And I say, sorry, I can't tell you because of GDPR. Compliance banter is pretty rubbish, isn't it? But it's even more annoying when you're trying to grow a business and your sales are being blocked because you can't prove you're compliant with things like GDPR and ISO 27001 or SOC 2. These are security standards that a lot of companies insist you have before they'll do business with you. But proving your compliance with these standards can just be a bit of a nightmare, taking the best part of a year in some cases. The good news is we're working with Vanta, who can get you up and running in a few weeks rather than a few months. Their focus is making this stuff easy so you can spend as little time on it as possible. So if you need to prove your security practices are in order, and if you want $1,000 off, head to vanta.com/makingmoney.
What would you say to people who are like, they've had bad experiences with insurance in the past? Like, it might be health insurance, probably not car insurance. They're normally pretty good with cars, I find. But like health insurance, you might have an excess or dental, whatever. And they're like, how do I know that it will actually be paid out if I'm in that situation? Like, what percentage of claims
you got the stats
are paid out or like refuse to be paid out? Yeah, how many don't make it because your leg's not really broken, or you don't really have cancer, or you lied about smoking, or whatever it is?
Yeah, so all of the insurers publish their stats on claims. So it used to be, years ago, that it was like not really talked about. People didn't tell you, are they paying out, are they not? People just didn't know. And I think insurers have done a lot of work on working on consumer confidence, because now all insurers release their claim stats. So you will see, and we would say with life and critical illness, it's in 90+% of claims. Like with life insurance, it's like 98, 99%.
Yeah, that's what you want to hear.
Yeah. And that is because, people are...
He died.
I'm pretty sure he dead.
People are, they're definitely dead.
He's not doing a 2-pack hiding in Cuba on an island.
Yeah, no, exactly that. But I guess the flip to that is the non-disclosure. So, they are underwriting it when it's at claim. And we know now that 98 to 99% of claims are being paid. So it shows that, we're doing a good job, I guess. So
yeah, I think so.
Yeah.
When I had the conversation with the broker, he was like, just to make you aware, if you kill yourself in the next 12 months, you're not covered. And I was like, I'm covered if I kill myself. Again, like I didn't think that was something, I thought that was an instant, it's the biggest killer of men under 50 in Britain.
Yeah.
We have a mate who killed himself.
I have 2 mates.
Yeah, I know 3 lads who have killed themselves.
Yeah.
So like, I'm not saying that that's like a good thing.
No.
But again, it's like this protection exists.
Yeah, it does.
People, I thought that would be an instant, oh no, he killed himself, you're not covered.
Yeah, no. Yeah, you are covered.
I think it's really good that you cover for mental health as well, because that, especially with all the men going through it, like
and women, it's not taken seriously as a physical condition, is it? Yeah. We separate mental health and physical health, whereas actually they're clearly both very linked. You know?
Yeah.
Yeah. What about pre-existing medical conditions? How does that factor in, and what kind of things are like pre-existing?
So everything's pre-existing, right? If you've had something happen to you, it will probably, need to go on the form, depending on how long ago it was. Pre-existing will depend on what type of cover you're looking for. So if you're looking for life insurance, the fact that you hurt your back 3 years ago isn't really going to make any difference to the underwriting process, but it will do an income protection because it makes up such a big portion of the claim. So it depends on what type of insurance you're going for, how recent the illness was, and how severe it was.
And if you've had lots of time off work, will that factor into, say, income protection? Will they look at your history of absence or whatever?
They do ask, yeah. So you're going to be asked, the basic questions with income protection are, what was your treatment? When were you diagnosed? Did you have any time off work? These are going to be the things that the insurer is going to want to know. So if you injured your back, what happened next? What were the investigations? What did they look like? Did you have time off work? Did you have treatment? Are you having ongoing treatment? Have you got any future treatment? All of these things are all taken into consideration.
And that will just put up how much you need to pay on a monthly basis. Is that what typically happens?
It depends, actually, because usually we'd expect, if it was something quite recent, for it to be an exclusion and income protection.
So they will just say, we won't cover you for that?
That's right.
Okay. Yeah.
And if you're going for multiple different types of insurance, should you go to one broker, or will you get a better deal if you compare the market, and you go look around?
So we will look at the whole market. Okay. So we're a whole of market.
So because you're a broker, so you compare
like a mortgage advisor that's not tied. You can consider every insurer.
Every insurer.
And that's the best way. So you can get maybe life insurance from one, and then income protection from another one.
Yeah.
And then,
Yeah, you can spread it around. There may be a reason why we would say put them all together. So sometimes if you package them all together, the insurer will give you a small discount for taking them all with one provider. So it depends.
So it's good to go to someone like you and a broker, and then look at the whole market rather than just going to one company and saying, give me a deal.
Yeah, exactly that.
What should people ask then? Should they say, are you whole market or?
Yeah.
Is that
whole of market? Do you use a panel? Can you use everyone? Yeah, because it's not necessarily the case that people are whole of market. Some brokers are based using a panel, and if you're going to a bank, they're possibly tied to one insurer.
Just their own provider or whatever.
Yeah, or they might be tied to Aviva or Legal and General. They might have a deal there.
It's the same with mortgages then, so we approach it in the exact same way.
Yeah.
Do you mind me asking how you get paid?
Yeah, sure.
Making money straight for the thought. Let's go.
I think it's an important question about.
It is a really important question. Yeah. We don't charge fees. So for the client, when they come to see us, they don't pay fees up front, but we take commission. So we get paid commission from the insurance company. Yeah.
So we obviously mentioned the whole of market. Is there anything else that you think people should be looking at when they're choosing a broker?
Yeah, I think there's some important points. I think due to the way we're paid as commission. I think you should be really avoiding anyone that's telling you they're also going to charge you a fee for that. So they're going to be paid twice. I also think if you are dealing with someone over the phone and they seem pushy and really salesy, then I think maybe steer clear a little bit of that, because we're very centred on advice rather than, pushing people down a certain path. And I would also say, be careful putting your details in the internet, because you may get a lot of calls.
I get them every day, every few days, like call centers, and they're like, life insurance, death insurance, housing benefit. And I'm like, I don't have housing.
You had a car crash last week.
Literally, you had a car crash, and like, you missold PPI and buy this life insurance. I'm like, how do you guys keep calling me? So if you get incoming calls, is that something you should be worried about, or
Definitely.
are there reputable companies doing?
I would do your own research. Don't let anybody sell to you over the telephone if you're not engaging with them.
Especially if you didn't ask for them to contact you.
Definitely not then.
Yeah.
But even if you do put your details, because I think the problem is sometimes then multiple people can call you. So just be aware, look them up. You know, if you're going to have a conversation with someone, have a look at who they are.
Yeah, like some of these websites where you fill out, it's like, we'll tell you what kind of cover you might need. What you're actually doing is giving data over that they then sell to loads of brokers, and you get 5 phone calls in 24 hours.
Yeah.
And it's like a free tool to help you, which really they're just getting your data to sell it, aren't they?
Yeah. I get calls. I get messaged all the time asking me if I want to buy leads. Literally, lead companies do not leave me alone.
I get them.
Yeah. Do you want to buy leads for critical illness, life insurance? We're like, no, it's fine. We do. We're dealing with our own clients. It's fine. But lots of people will be buying those leads, and those leads will be sold on to multiple people. Probably.
Definitely.
Probably.
Okay. Yeah. And you know, how is your industry regulated in terms of like the incentives to refer to one over another? Because obviously if one's like, we'll pay you double the kickback or whatever, like, it's fine that you get paid, and I think that model works, but who oversees that to make sure that people get the right insurance and not the right commission for you?
Yeah, so we're really heavily regulated, as you'd expect. So we're regulated by the FCA, and actually, you know, it isn't a number that you look at. It's like, and it doesn't differ that greatly from insurer to insurer anyway. So it isn't even a factor when we're given advice. We would be advising based on the quality of the product, but we are heavily regulated. Yeah. So, you know, we have to explain in a letter which we send to the client why we recommended that product, why it was suitable. So that people feel safe, I guess, that we're doing the right thing.
And if the insurer goes, is it the same as in finance? If the insurer goes broke, who covers the claims?
Yeah, so what we found in the market actually is that with insurance companies, they're all being bought up by different people. So what might happen is, so we recently had Aegon being bought or being taken by Royal London. So those people's insurance is now gone under Royal London. So they are now fully protected under the Royal London scheme. So that is usually what happens. But there is also some insurances in place from a regulatory point of view.
And so one obviously insurance that comes to mind is PPI, that was like widely missold.
Yeah.
Why are you looking ashamed?
I'm not looking ashamed. I never sold it. So
I did.
That is not my bad.
Yeah, I did.
Yeah.
Well, I didn't know I was selling it. I worked for Barclaycard. Maybe we should. I worked for an undisclosed bank, just in case. But I worked
edit that out.
I worked there as a student in the summer, and it was just like, I worked on the credit card department, opening new credit cards. I worked there for like 6 weeks, and it was basically like, that box there is pre-selected unless they say they don't want it.
Yeah.
And it was like, we were just giving PPI as a standard. It was like, oh, you have to have this cover.
Yeah.
I think what you were saying before about it's underwritten at the start, PPI was not underwritten. No. So that's why it could never pay. It was never paying out.
Yeah, that's exactly right.
Yeah. So, but what about mis-selling, and is there protections for consumers if they feel like they've been mis-sold an insurance policy? So.
Yeah, 100%. So we have the financial ombudsman, and that is how you would kind of follow through if you felt disgruntled or you feel like someone sold you the wrong product. Then you would make a complaint to the ombudsman, and the ombudsman would investigate.
Perfect. I just want to be clear. I didn't missell PPI.
No.
It was just like, even the people selling it didn't know what it was. Yeah. It was just like, that box is pre-ticked. Only just get rid of it if people say they don't want it, you know? It was like standard.
I mean, PPI was a scandal, right? Yeah. So there's no good ignoring it. It was insurance. It was a scandal. But as you say, it was underwritten at point of claim. And I think that is the big difference. Like, all of our insurance is underwritten up front. PPI was underwritten at point of claim. And people weren't explained, like, you've had a bad back, you won't be able to claim on your back, or you've had, something else wrong with you, it's not covered. So it was just like, oh yeah, you've got this, it will cover you if you're sick. Untrue in some circumstances.
Is there any tricks or things that people can say to get better deals?
I would say see a broker. That would always help you get a better deal. Yeah. I think if you're struggling with paying the premiums, there are conversations we would have with those clients. So with, for example, income protection, you can have full income protection, or you can have something called budget income protection, which means that it pays out for a maximum term of 2 years rather than a full term.
Wow.
But it's 50% cheaper.
Okay.
So what we'd say to people is, obviously, if you can pay the premium for full IP, income protection, take that. If not, what about its budget option? So there is also life insurance. You can have it as a lump sum, but you can also take it as an income.
Oh.
So you could say, I want £100,000 lump sum, or I want 10,000 as a income over 10 years. So it's the same amount.
Yeah.
But the income version would be 50% cheaper.
Okay, because they get to sit on the money and
exactly that. It's a form of decreasing cover, right? Because in year 1 you'd get 100,000, but in year 5 you'd get 50,000 because it's 10,000 each year. And
I do want to our audience tend to have disposable income because that's the nature of it. But I do also want to be sensitive to people out there that have got hardly any money at the minute, and they're struggling to live essentially, but they also are aware of this point of, I want to protect my family.
Yeah.
Are those the options that exist for them then, these cheaper covers that are temporary?
I think so. I think something is always better than nothing, right? So when you're thinking about protection, if you're ill and there's nothing in place, then that's it. If you're ill and you've got £50,000 worth of critical illness instead of 100,000, that's still £50,000. Yeah. So I would say that is the thing I always say to people, take something now.
Yeah, because you said your family member said, if it's for your life, don't be cheap, which obviously makes sense for someone who's got capital to spend on it. But if you don't, it's better to have something little than
I think he meant get advice, in terms of don't just go on a comparison website and pick the cheapest option.
Professional.
With the car insurance, that's what you do, right?
Yeah, definitely.
You just bang it in. Whoever's at the top.
Yeah,
I don't want a black box. You want third one down. But he was like, no, don't do that with this. Go speak to a professional. But you say you would recommend to someone, you should get this option that's cheaper because you can't afford.
Yeah, we would give advice on it. So you would talk to the person and say, what's your budget? What can you reasonably spend? And then what can we do to fit what you need into that budget?
Since we're in the dark parts, if you pass away and you've got life insurance, it goes to your partner or your family, and then a year later your partner passes away and you've got this 10-year, they get 10 grand a year. What happens if the next person in line passes away while they've got that life income?
With the family income benefit, what we would do is we would write it into a trust. So if you took out a life insurance policy in a family income benefit for your son, it would be written in trust for him. So, or if it was for your partner and then for him, if your partner passed away, your trustees, who are the people that are taking control of the money in the trust, would make sure it was paid to your son instead.
Okay, cool.
Yeah, I had to specify the order of succession.
Chain of command.
My sister is third in line to the assets or whatever, and then the trustees are my mum and my uncle now, and that'll change in later life. But yeah, it's they have the ability to make a sensible decision essentially.
So other than non-disclosure, people telling porcupines on the form, what other common mistakes do people make when they're applying for insurance?
So I think with us that doesn't really apply, if I'm honest. I think we are taking our clients through the process and holding their hand. So I think non-disclosure is something which we cover off because we're really careful with anyone we speak to make sure we explain all of the questions completely, so everyone understands exactly what they mean. And apart from that, I think I can't really think of any other reason why people would struggle.
it's not too complicated. It shouldn't be daunting process. It's quite simple. It's
pretty reassuring.
Yeah. It honestly
and it's
is.
quick, or like how long does it take normally to?
Okay, yeah, it can be quick.
Yeah.
So I think it depends on the information that the insurer will want. So if you're looking for larger amounts of cover, they might want to write to the GP. They may ask you to go for a screening. So where you'll get to larger amounts, they're going to want more information.
Okay.
Which can take longer.
And what do you have any advice for anyone that's unsure about getting insurance in general? You know, is there anything that you would say to someone?
Yeah, don't wait.
Don't wait.
Yeah, don't wait, because you don't really know what's going to happen to you in between thinking about it and taking it out.
And you can't do it after you've been hit by a bus, or
and I've seen
my friend got hit by a bus.
Yeah, I've seen a few cases, where we've had a conversation. People have said they're going to wait, and they've been diagnosed with illnesses. Then now they can't have the cover, and that that's happened a couple of times. So
yeah. And do you know, like, I mean, you had some stats off camera before around some of the payouts and stuff that I don't think we've covered. Could we go through some of those? Because I thought they were quite interesting.
Yep. So these are just Aviva stats. So in 2023, Aviva reported over 40,000 life insurance claims, and that totaled 761 million. They had 5,000 critical illness claims, which was 362 million. And income protection claims were 4,000 claims, 53 million. So they paid over 1.18 billion in total. And since 2019, they've paid over £5 billion in claims.
That's just Aviva.
Just Aviva.
In the UK.
In the UK. So the ABI, so that's the Association of British Insurers, look at all of the insurance in the market. And they haven't done 2023 yet, but 2022, there was nearly £7 billion paid in claims in the UK market. So life insurance, critical illness, income protection, and that includes individual and ones that get paid out through work, so your death in service, came to nearly 7 billion.
Do you know what percentage, sorry for asking you all these stats, percentage of people have insurance? Obviously, like from not the kids, but like maybe 23 upwards, like what percentage of...
It's really difficult to say, because it's so difficult to know. We don't get that kind of final number, because some people have cover through work and some people take cover personally. More people have life insurance than critical illness, and more people have critical illness and income protection.
So that's all.
I reckon more people are uninsured than are insured, though.
Oh, definitely.
Yeah, I would say so. Yeah, for sure.
But you don't know, like 40% that you can't.
I'd be guessing.
Yeah.
Well, at least you're honest. I like that.
I'd just be like 42%. Say it with your chest.
I could put a number out there, but I would be guessing. Yeah. But insurance, the market is growing. Like, more people are taking out insurance. We're seeing more people insuring themselves. Income protection has grown substantially over like the recent years. And I think it's probably because people weren't talking about it.
And the NHS is declining.
Yeah.
I think, waiting lists are extending in the NHS, and the country's getting sicker. Yeah. And I think people are more aware. Like private medical insurance is on the rise, because people, like, I waited for 17 hours to get a brain scan to see if I had bleeding on the brain. Wow. And I was like, how do I get seen quicker? He was like, just pass out. And I was like, all right, cheers.
Okay,
mate.
then.
I've already done that tonight. That's the whole reason I need a brain scan.
Yeah. It's scary, because it's like, I think it's something like 7 million people are on the waiting list for some sort of treatment with the NHS at the moment.
Well, they're saying about cancer, it's like, the goal is to get most people seen within 60 days of being diagnosed. It's like, if I get diagnosed with cancer, I want to be getting treatment the next day.
It can go to the next stage. While you're waiting, it can like develop to the next stage of cancer. Maybe if you get your 50 grand,
you'd be like, well, I'm going private. See you later. Like, I'm not going to wait for 2 months for the NHS. And I love the NHS, and it's a great establishment, but it's clearly struggling, and people are dying as a result of that.
I think COVID as well, like, people saw how bad the NHS can get when it's over taxed, and they're like, maybe I should get some insurance. And like, the furlough it was nice, but it didn't really change people's lives, so that maybe I should have something in case I get sick, I get COVID, 100%. I can't work, or like this happens again, like I need to have some protection.
Be protected.
Well, I really interesting conversation, and I hope it's opened people's eyes. We'll put all your details in the description and in the newsletter and things like that.
Yeah, perfect.
Heath is in like Heather, is that right?
Yeah, it's after my daughter.
Yeah, it's lovely.
Yeah, so Heath, Heath.
Okay.
People think it's health, it's not. So it's just open health protection, it won't come to me.
We hope you found that episode insightful and it gave you something to think about.
If you want a summary, check out the newsletter in the description below.
And we also mentioned Lisa Conway-Hughes in that episode. So we'll just link the episode with her here so you can watch that next. It's all about sorting your financial life out.